Stocks rise on Wall Street despite a higher than expected February inflation print. CPI rose by 3.2%, which was higher than forecasts of 3.1%, further clouding the outlook on rate cuts by the Fed. Asian markets give up gains to trade mixed after a strong start following gains on Wall Street. The GIFT Nifty is indicating a slightly higher start for the Indian market. Brent crude remains range-bound around $82 a barrel following inflation data in the United States. The OPEC has also maintained its forecast of demand rising by 2.2 million barrels a day. Gold, however, retreats from record highs after the US CPI comes in higher than expected. Domestic retail inflation remains steady in February at just over 5%, even as food prices accelerate. Core inflation cools to 3.3%. Industrial output in January also remains steady at 3.8%. British American Tobacco, the long-term strategic investor in ITC, will sell 3.5% stake through block deals. The sale is likely to fetch BAT over 16,700 crore rupees and will continue to hold 25.5% stake in ITC post the stake sale. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. And of course, macro, the inflation data, that continues to be the big focus point. Of course, other than that, the stocks and news as well. But first up, let's take a look at what the Asian markets are doing. It was a strong handover that we got from the Wall Street. This despite the inflation number coming in higher than expected. And right now, the Asian picture is quite mixed. We have Taiwanese index and the Hang Seng, both of them higher. Hang Seng up around 0.2% and Taiwanese index up around 0.3%. But Nikkei continues to trend lower. Shanghai too is lower in trade today. But if we take a look at the GIFT Nifty, that one is indicating that the start for our own markets could be slightly in the green today. 14 points higher is what the implied open is suggesting right now. Let's talk about the US markets now. Wall Street ended Tuesday's trading session higher. The Dow gained 235 points while the S&P ticked up 1.1%. The tech-heavy index, the Nasdaq Composite, added 246 points and tech stocks resumed their rally as shares of chipmaker giant Nvidia surged 7%. Meta too ended with gains of 3.3% and computer software business Oracle surged 11% after a better than expected earnings. The other big cue was the CPI data that came in mixed, raising questions on when the Fed will start cutting rates. The CPI climbed 0.4% month over month and 3.2% on a YOY basis. In fact, CNBC's Steve Lisman has a roundup of all the data.
Not a lot of progress in the past couple months in the Fed's battle against inflation. Here are the numbers: up 0.4 on the headline. That was in line with expectations. That is up a tick from January with higher energy prices. Headline year over year does tick up to 3.2%. The core, a tenth hotter than expectations, actually 0.004. It was 0.36. It rounded up. And that was unchanged, but a tenth higher than expectations. Core year over year does decline because of base effects with prior numbers dropping out that were hotter. How do we get here? Food unchanged. Energy, there's the surge in gasoline prices on the month. New vehicles down a tick. Used car up 0.5, reversing a downward trend. And there's that pesky owner's equivalent rent did come down finally, down from 0.6 to 0.4% on the month. What happened to the Fed probabilities? Well, before the CPI, May was at 21, now 13. June was at 70, now it's down to 68%. Here's the question at next week's meeting for the Fed. Do Fed officials still project 3 cuts, or the median Fed official still projects 3 cuts this year? Does this number change that? Meanwhile, the CNBC NRF retail monitor, powered by actual credit card spending data from Affinity Solutions, shows a rebound in consumer spending in February. Retail sales were ex-auto up 1.1%. That compares to a 0.2% decline in January. Take out autos and gas year over year up 6.3%. Go to the core retail, which also takes out restaurants, up 1%. This number was helped a bit by the leap year or the leap day in the month. But if you take it out, it still shows pretty good gains that were out there. Yes, that's right. Up about 0.3%. The February inflation data may still have some effects of one-time beginning of the year price hikes, and so could cool off if that's the case. But the consumer strength, as shown in the retail monitor, could also play a role in the stubborn inflation numbers. That could mean lower inflation might ultimately require a slower economy.
Okay, all right. Let's stay with the U.S. markets. Like we mentioned, the U.S. CPI data has raised questions on when the Fed will start cutting rates. Let's listen into some expert opinion on the Fed and their rate cut trajectory going forward.
The market has been on a roller coaster. We were pricing in as many as 7 cuts, then 2 cuts. Now we're at 4 cuts. We were pricing in at one time March. Now we are June. The Fed has held a steady course. 3 cuts most likely starting in June, and that was reaffirmed by Chair Powell. I think it's around 2.5 to 3. I think the biggest likely error is that the Fed gets too data dependent, continues to be too data dependent, focuses only on 2%, and in the process sacrifices what has been an exceptional economy that has outpaced all the other economies in the world.
You think the inflation rate's trending down to 2%, the federal funds rate, even if you have a pretty high equilibrium real interest rate, it's still going to be pretty restrictive. So my own view would be that they have plenty of room to still be restrictive and ease 3 or 4 times over the course of this year. So I don't think they're going to be in a rush to ease, but June's not really being in a rush. And I think it's actually important that they do have more confidence. So rather than being data dependent, they should be forecast dependent. I don't think this release changes their forecast very much at all.
Okay, it's time to get you the final update in our global market wrap this morning. Strong cues coming in from European markets with the French CAC gaining about 68 points. The British FTSE scaled its highest level since May 2023 and surged over 1%. The German DAX, meanwhile, ended at a fresh record high with gains of over 200 points. The DAX's rally was led by cooler than expected inflation in Germany, which came in at 2.7% in the month of February. The Pan-European Stock 600 breached the 500-point level for the first time on Tuesday, hit another record high and closed with gains of 1%, led by banks and automakers. Okay, all right, that's the global market action, but let's talk about how these cues will impact our own markets. We have our research team joining in, as always, to tell you just that. This is our Power Prep segment. Good morning, guys. Sudarshan, let me come to you. There are a lot of macro cues, a lot of global cues as well. What is the market setup looking like today?
Morning, that's correct. So, well, the cues are largely positive, at least on global front, after an inline US CPI for the month of February. US equities saw a close with healthy gains led by technology names like Meta and Nvidia, but at the same time, US 10-year yield too saw a move higher and is now around the level of 4.2%. And following all this, GIFT Nifty is indicating a start with minor gains for Indian market. For our market, yesterday's move was an extension to what we saw on Monday, that is broader market sell-off. Mid-cap and small-cap index saw a fall of nearly 2% each, while Sensex and Nifty saw a close with minor gains. But the real pain is being seen at the stock level than at the index level. On your screen, you'll be seeing a name of few stocks which were either at 52-week or record high just a few weeks ago, and from there have taken a sharp knock and are now down somewhere in the range of 30 to 40%. And mind it, these are very few names. Like this, there are several mid-cap and small-cap stocks which have seen a similar kind of move. Also, the market move over the last few days is indicating one thing, that is preference for large caps, and that too index heavyweights. On Tuesday, top Nifty gainers for the stocks which have maximum weightage in the index, and those were HDFC Bank, TCS, Infosys and Reliance. Coming to institutional activities, both FIs and DIs were buyers for 5th straight day. FIs bought shares of rupees 73 crore and DIs more than rupees 2,300 crore. In the cues to watch, we have US crude inventories. Keep an eye on ITC as BAT is looking to sell 3.5% stake via block deals. Also keep an eye on Max Finance and Axis Bank as Delhi High Court is going to hear the plea filed by Subramanian Swamy.
Okay, all right. Thank you so much, Sudarshan, for joining us with those cues. A lot of stocks that will be on our radar as well. Vamakshi has that list. Good morning, Vamakshi.
Well, good morning, Sonal. Let me first start off with ITC. The stock has been in focus yesterday and will continue to be in focus today. British American Tobacco is looking to sell nearly 3.5% stake in the company. The price range will be nearly 384 to 400 rupees per share, and this values the 3.5% stake that BAT owns in ITC at 16,775 crores. BAT, after this transaction, will hold nearly 25.5% stake in ITC. Apart from that, keep an eye out on Aurobindo Pharma. Eugia Pharma Specialties has started distribution of aseptic products manufactured at Unit 3. This was earlier temporarily stopped, and in fact the company is expecting the commercial production from these lines of the facility by April 15th, 2024. Shalby will also be on our radar. The company has announced that they will be acquiring 100% stake in Healers Hospital for 104 crores. Signature Global will be the next one that we will be watching out for after the company has launched new project under affordable housing policy in Gurugram, consisting of nearly 235 units with area spread over 1.6 acres. Glenmark Pharmaceuticals and Glenmark Life also in focus. Nirma has completed acquisition of 75% stake in Glenmark Life Sciences. Titagar will also be in focus after Titagar Rail Systems has launched the second 25T Bollard pull tug for the Indian Navy. Muthoot Capital also on our radar because EV Fin partners with the company in order to expand its electric two-wheeler financing across India, and in fact this collaboration entails a total deal size of up to 150 crores. Oriental Rail Infra also in focus. Indian Railways has increased the order quantity of box NHL wagons by almost 91 wagons to 3,055 units. Let's also focus in lastly on Macrotech developers. The promoter has in fact sold nearly 49.7 lakh shares equity via block deals at 1,180 rupees per share.
Okay, all right. That is the list for stocks and news. Let me go across to Nigel joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. You know, yesterday's trading session as well, the Nifty consolidated. The problem is in the broader markets, and the advanced decline ratio is getting a little bit worrying now. You know, besides what happens on the index, one hope the bulls will have is at least the number of stocks advancing, you know, they gradually start moving higher, you know, in comparison to what we have seen, 300, 400 stocks. You'll want it to get at least around 600, 700 stocks, and then you'll be feeling a little bit good. We're not out of the woods in terms of the broader markets, but some improvement in the breadth is what the wish list would have. What did the FIs do yesterday? Well, they added more longs than shorts. They added close to around 7,500 long contracts in the ratio of close to around 3:1, but they continue to remain net short with close to around 57% of their positions on the short side. The Nifty Bank, that recovered from yesterday's low, and I'm looking at this broad range. The support level will be at around this 46,600 mark to around 46,800. Why do I say that? Because we bounced off yesterday's low. That's the reference point you have out there. And also the 20 and the 50 DMA is in that vicinity. So it's crucial that the Nifty Bank holds that 46,600 to around 46,800, which is the 50 and yesterday's low as well. What about the Nifty? Well, yesterday you had the markets that consolidated, and on a day-to-day basis, you are seeing signs of writing at around the 20,000 put, 20,050 put, which is telling you that the near-term support is at around 20,000 odd. Give and take everything, as long as the 22,000 mark is holding out, you'll still have to say we're pretty much in an uptrend, you know, because that's what the data points are suggesting. On the upside, 22,550 becomes a bit of a resistance zone because 22,500 call has been written aggressively. And the 20 DMA, that's the first reference point on the downside. So 20,000 is support, 22,200 is the 20 DMA. One stock that I'll be focusing on today is ITC. Last few days, we've been seeing a huge open interest built up. So that stock needs to be in focus. Let's get that plate up for you on the screen. The total open interest out there is nearly around 11 crore shares. 35 lakh shares getting added yesterday, and my colleague Mangalam tells us that in all probability that the block could happen in pre-market. So if it happens in the block window, those shorts will have to scamper for cover. That's the stock I'm looking at in today's trading session.
Okay, that definitely will be the stock of the day today. Thank you guys for joining us and telling us what to expect from trading day today. Time for a short break now. When we return, domestic retail inflation in February and industrial output in January came in steady. We get you the highlights on the other side. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18, and let's get you some important macro data now. Inflation remained steady in February at just over 5%, even as food prices accelerated. Meanwhile, core inflation cooled to 3.3%. Industrial output in January also remained steady at 3.8%. Ritu Seng joins us now to decode the numbers. Ritu.
Well, retail inflation for the month of February broadly stable at 5.09% compared to 5.1% in January and close to the number that our poll threw up as well. This came on the back of broad-based moderation in prices barring food inflation, which remains a spot of bother. Food prices inched up over the previous month at 8.66% in February, and this increase was driven largely by a rise in meat and fish inflation. Vegetable prices as well remaining high as expected, seeing a very sharp price rise of 30.3% over the previous year. Cereals and milk prices also contributed to the pain points, but on the other hand, edible oils and fats, they brought down inflation to some extent. But the big positive surprise was the core inflation, that is ex of food and fuel, coming down to 3.37% in Feb from 3.6% in January, a more encouraging trend. But on the IIP front now, there was more of a mixed bag. The January IIP growth slowed down to 3.8% from the revised December number of 4.2%, also a tad below our poll. The year-on-year growth continued to be led by mining and electricity sectors, mining growing 5.9%, electricity 5.6%, but manufacturing, which has the highest weightage on the index, recording a moderate growth of 3.2%. Now, barring primary and consumer non-durable goods, all of the other segments in the used-based segment category, they recorded a higher year-on-year growth than the overall IIP number for the month. Consumer non-durables registered a contraction of 0.3% in January, which indicates a muted consumption demand, while consumer durable output jumped sharply to 10.9%, but this was largely because of a favorable base effect.
Ritu, thank you so much for joining us with all those details. We'll slip into a break. When we come back, we'll talk about all the cues from the commodities market. So stay tuned for that. Welcome back. You're still tuned into Power Breakfast. It's time to talk about commodities now. There's a lot of action there as well. Manisha Gupta is joining us with all the updates. Hi, Manisha. Good morning.
Morning, Sanal. Thank you for that. Well, I'll start with the crude oil prices, where we have seen some strength come back, and this is after the OPEC demand outlook, where they are estimating a stronger one for 2024 and 25 as well. And then apart from that, the global growth estimates also is put at around 2.8% by the OPEC. The markets also are reacting to the U.S. inventories, which have seen a decline by 5.5 million barrels in the previous week. So the physical demand clearly seems to be getting better. And then the talks of Israel-Hamas ceasefire seem to have fallen through because there are more attacks in Red Sea, and that premium also seems to be coming in for prices. The profit-taking, though, has finally come in case of gold prices after hitting those all-time highs for many, many sessions there. Well, the U.S. inflation data is higher than estimated at 3.2% for the month of Feb, and that is what the gold prices are reacting to. In any case, the run-up was too much too soon, so there is some profit-taking because of that as well. The markets even now are projecting a 60% probability of a June rate cut. If that comes through, then you perhaps are looking at a pullback coming back in case of gold, and further highs is what the street is working with.
Okay, all right. Thank you so much, Manisha. So that's what's happening with the commodity markets. Let's move on to some updates on the electoral bonds case now. The State Bank of India has submitted the electoral bonds data to the Election Commission, complying with the Supreme Court order. The Election Commission will now have to collate all the data and publish on its website by March 15th. As per the Supreme Court order, a compliance affidavit also needs to be submitted by the Chairman and Managing Director of SBI. Okay, this is a developing story, and of course, we'll keep getting you more updates on this one. We'll do one thing. We'll take your leave on this edition of Power Breakfast now, but do stay tuned. Bazaar Morning Call comes up next.